Good evening, it's Paul Scott here on Thursday the 25th of June. I'm recording this quite late at about 10 o'clock in the evening because I've had an extended afternoon nap today, so I'm full of beans now. I want to get this done before question time starts. Anyway, I won't waffle too much like yesterday, let's get straight into it. A few stocks I'd like to finish off on which are announced today. Pharma put out a pre-close trading update here for the half year. It'll start to get quite busy, I think, obviously for half year trading statements now, given that we're right at the end of June. All seems good here. They say they're trading in line with current board's expectations for the full financial year. They also talk about growth in the key product Flutiform, which is some sort of inhaling device for asthma sufferers, and they're launching it in additional countries. It all looks pretty positive, actually. They also say here that they anticipate getting an $8 million sales milestone payment. I think this stock looks interesting, actually. It's a good growth company. It's been a bit of a basket case in the past, but if you look at the historic graphs here, they've really got their act together. And look at the forecast profitability here. I mean, it's absolutely shot up. And it doesn't seem to be down to one-offs either. So the balance sheet's been fixed as well. It did have a huge amount of debt. That's all gone. Looking at the broker consensus chart here, you can see that the earnings forecasts were downgraded considerably in January, and then very slightly again in May. So that's the reason the share price has been quite depressed of late in what's certainly looking like a very frothy market in the last 2 or 3 months. Lots of small caps are really coming alive again at the moment, often I think on a fairly spurious basis actually. So I generally feel uncomfortable with this market. I think anything that's getting toppy in terms of valuation, I'm looking at top slicing or selling altogether. I think people are getting carried away with valuations generally, but this stock is not one of them where people are getting carried away with valuations. It's on a forward PE of only 15, which seems pretty modest to me considering it has net cash, as you can see by comparing those two numbers. I know the company reasonably well and the balance sheet's solid. I think at some point this will be a takeover target. So I quite like Pharma, and I hold a few myself. So it's reassuring to hear the company say today that they are trading in line. So that's good. Next one, let's tick that off. The Daniel Stewart saga continues. I mean, I don't know why I bother mentioning it, because I don't hold any personally, and I never will. But it's just an interesting topical situation. They announced today they've raised 1.2 million at a ridiculously inflated price, 3.35p. This is quite obviously an exercise in managing the share price up. I don't believe for 1 minute that there's any significant value at all in this business, because it's quite obvious from the figures that there isn't. This is the joys of having Mr. Rob Terry involved in your business. The shenanigans start soon after he gets involved with all his financial engineering and all the rest of it. The market cap will be up 41% on last night's close, so whatever that works out, I mean that's at least about another 6 million. So over 20 million market cap plus the new shares, and I mean it's a lousy business. Look at that turnover going nowhere. Loss making nearly all the time. It's just a joke, this business. It's got to be certainly I think the worst listed broker on the UK market in terms of reputation and performance. So what they'll get up to with Mr. Terry involved, who knows, but managing the share price up to a completely artificial valuation is obviously part and parcel of that process. So good luck to them, and I hope they don't suck in too many mug punters into who the people who usually end up carrying the can for those sorts of people. Cohort, right, I like these results. This is a defence contractor, a group of defence companies. These figures look pretty good for the year ended 30th of April. Revenue's up 40%. There were, I think, 2 acquisitions during the period, so that's not all organic. Adjusted profit before tax was up 23%, so not as much. Only half of the increased turnover dropped through to the bottom line, so that suggests that they've done some lower margin work, perhaps. And then the adjusted earnings per share was only up 7%, which surprised me a bit. I wondered if they have possibly issued some new shares as part of the actually, let's have a look on the cash flow statement as part of the acquisition process. Sorry if this is making you dizzy. I'm just scrolling down to the cash flow statement. Now their balance sheet is good. We'll stop off. God, there's a lot of blurb here, isn't there? I mean, I don't have time to read all that, obviously, as I look at 500 plus companies. Quite a big difference. This is the P&L here, so quite a big difference between adjusted operating profit and operating profit. It's always worth looking at what the adjustments are. Usually it's amortization of intangibles, which generally speaking is fine, as long as it's intangibles relating to goodwill acquisitions, because that's non-cash stuff. It's just a book entry, so they've got these are acquisition related costs. Okay, that's fine, those are one-offs, so all those adjustments look pretty sensible, so I'd be fairly happy to hang my hat on that adjusted operating profit figure. You've got your EPS figures here. Dividends look to be about 4 times covered. They pay 5p dividends. Now here's the balance sheet. You see, the trouble is when companies acquire other companies, you get a build-up of intangible assets here, which very often have to be written off in the bad times. So now the cash figure looks great, 19.7 million. But if you look at the total current assets there of 40.3 million, and compare that with current liabilities of 26.7, it's healthy. That's a good ratio. I make that a ratio of 1.59, which is sound, but it's not amazing. So and if you look at trade payables, that's actually very high. So what that's telling me is that the trade and it's shot right up. So that says to me they probably received a big lump of cash up front from the MOD, which is their main customer. It's a defence contractor, which could well be flattering that cash figure. So I wouldn't regard much of that cash as being surplus cash. That's the key point I'm trying to make here. Also, look at other creditors. Has suddenly I put 12.5 million figure has appeared there. I'd want to look into what that is. Note 7. It's probably deferred consideration on a one of the acquisitions. You should always look at all these liabilities, in my view, or I should, and look at what they are, because of course liabilities is stuff that's going to have to be usually stuff that's got to be paid out in cash at a future date. So the liabilities are future cash outflows. It's important to know not just how much they are, but what they are as well. Now, where's the I wasn't intending to spend so long on this one, but never mind. Cash flows. Okay. Wow, look at that net cash from operations. Yeah, here you go. They've spent 17.34 million on acquisitions, MCL and I plus S. A little bit of capex there. Oh, there's a disposal as well for 4 million. Divvies paid. Net cash outflow. Okay. There's a funds reconciliation. I can't remember why I came down to look at the cash flow statement now anyway. Oh, well, it doesn't matter. Let's move on. I know these things are slightly shambolic, but it's just all off the cuff. So overall then, looking at the Stockopedia page for Cohort, it all looks pretty sensible. They seem to have beaten broker forecasts, although you don't always know if the figure here is directly comparable with the adjusted figure in the company accounts. It usually is. So they've reported just over 20p, I think, and we've got 17.6p forecast there. So it looks to have been above expectations. The markets liked the results. The share price is up 6.8% today, which reinforces that results probably are better than expected. Oh, the order book was very good with Cohort as well. Let's go back to that. Here you are, order book up 63% to 134 million. Although it does say in the narrative that Some of those are long-term contracts, so it's not expected to further increase. I'm a little bit wary of this stock because its main customer is the... sorry, I'm a bit bunged up. Its main customer is the MOD, and of course defence spending's under a lot of pressure at the moment. So I think, bearing that in mind, this share is probably priced about right, on a P of about 12 or something. It says 13 there, but bear in mind they've just beaten forecasts. Yeah, it looks fine, but again, you know, dependent on very big contracts with really one main customer, that's higher risk than I would normally want. So I don't think a PE of more than about 12 is justified. But so far so good. Okay, next we'll have a look at Echo Technologies. They put out 2 announcements here: final results and contract win. Always good to throw in a contract win announcement, I think. Very nice figures. Revenue up 22%, adjusted operating profit up 54%. Really good. I mean, good figures were expected, so that's why I think the share price hasn't moved. The only thing is, I mean, it's just valuation with this stock, isn't it? It's about 90 million market cap or something, which is a hell of a lot for a small company with only sort of 17 million turnover. Yeah, they're down 3.1% today. Valuation last night 90.9, so about 88 million market cap. The stock ranks very low actually, only 37, which I'm surprised at. Forward PE of 30 times. Well, you could say operating profit's just risen 50 odd %, so the peg isn't bad. If you think those sorts of, if that sort of earnings growth is going to continue, then obviously you might be prepared to pay up for it. But it just seems a very full price to me. Now, the other interesting news about this company today, what have they said on current trading? Doesn't really say anything about current trading apart from encouraging sales pipeline. They're looking to do an acquisition of Netcall. Now, if you look at Echo, the market cap's just below 90 million. Now, if you look at Netcall, which is also listed, the market cap is nearly as big. Well, that's up 7% on the day. Now, the deal is mostly in cash. It's 13.5p cash. Sorry, mostly in shares. So it's about 13.5p in cash, and the rest in about 50 odd p in Echo shares. Now, I think that's quite a big thing to... I think that'll cause indigestion for Echo if the deal goes ahead. You'll probably see a drag on Echo share prices because Netcall shareholders might well want to get rid of their new Echo shares. Because look, Netcall's on a much more reasonable valuation with a better dividend yield. So I think this is an ambitious deal for Echo that could well cause some short-term indigestion with their share price. Porter Communications have put out an AGM statement. Now, I hold this one. I've been a long-term holder here. It's been pretty disappointing. However, it's really come alive in the last few weeks, and it's up about 50%. Mind you, lots of things are going up at the moment. There's been really heavy director buying here, repeat heavy director buying. And then they've come out with an AGM statement today, basically saying they're trading their socks off. EBITDA after all costs in the first half will be significantly higher than that achieved in the whole of 2014. Now, you have to be very careful with these guys. They really over-egg the mixture in terms of their announcements, and the figures are often actually nowhere near as good as all the adjusted figures that they put forward. But it looks like it's starting to actually deliver sensible figures. And really, it's a case of following the money, I think, with these guys. There have been huge director buys relative to the market cap. It's only 26 million market cap. Look on the accounts tab here under director dealings, and you'll see that Bob Morton, the chairman, recently spent £500,000 buying shares. Sorry, 441,000. Well, near enough. Buying shares at 7p. The CEO has spent. Morton here bought a 6-figure amount there and a 6-figure amount there. And again here, I mean, he's really been piling money into this, the chairman has. And the big director buys the really big ones, started in June 2014, and they've carried on till today. There was actually another director bought a slug of stock today here, Raymond McKeeve, a non-exec director, yesterday purchased 100 grams worth of shares, just over 1 million shares at 9.1p. Well, buying the day before I put a really positive trading update has certainly raised a few eyebrows, I can tell you. Now, very quickly, this thing is amazing. Companies House are now giving all the data information free. So if you look at that's why I've included the address bar in today's video, beta.companieshouse.gov.uk. It's fantastic. If you try this, say for the Norcross acquisition, they acquired a company called Croydix. Now, I can just look up Croydix's figures here. Now, you've got to make sure you pick the right one. It was Croydix Group. Now, under filing history here, this is just so good. Here you are. You can just view their accounts. View PDF for the March accounts for Croydix. And this is exactly what I did. I looked this morning at Norcross's acquisition of it, and here they are. It's just awesome. I mean, before you used to have to pay £1 for them. It was more. It wasn't the fact that it was £1. It was the faff, in getting the actual accounts. So I can read here the business review of Croydix that they wrote, and it all sounds great. It's really positive, and the figures themselves look excellent. I've reviewed who are not 20 million turnover, just over 2 million operating profit, so good margin there, about 10%. And then the balance sheet's lovely. It's got a really nice strong balance sheet. I've looked up that the assets include a long leasehold property that's worth 2.3 million. So all in all, this gives me additional comfort that Norcross have made a really good acquisition here. Okay, that's all we've got time for. I will speak to you soon. Thanks for listening. Bye.